How is everyone doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. So today I wanted to bring everybody an episode about the so-called super app. So in other words, if you've got your bank mobile app out there, I think it really calls into question the value proposition. What is that mobile app doing for you as far as all of the different design features? Now, this conversation today is really going to be focused around the small business customer, and we're going to be looking at a blog post from PCBB. Now, obviously, we see a picture there of WeChat, which is the famous Chinese mobile super app, if you will. We'll get into that in just a second, but first, I want to kind of blow this up here so everybody can see it. So this blog post is titled From Messaging to Money, the Super App Shift. So comprehensive super apps that manage messaging, financial services, payments, and other tools are targeting small businesses. We detail what these apps can do and how you can compete. So in 2011, when Tencent added mobile payments to its messaging app, WeChat, few predicted it would become the default operating system for millions of small businesses in China. Suddenly, a corner coffee shop could not only accept payments, but also manage suppliers, market to customers, and access working capital, all without leaving a single app. In other words, what began as a chat app evolved into an indispensable business ecosystem. Today, that same transformation is starting to take hold in the US with tech giants and non-bank platforms embedding financial tools into broader business services, creating super apps that bundle banking with operations. For community financial institutions, this represents both a threat and an opportunity. Lose a generation of digital-first entrepreneurs or win them over by offering the trust, guidance, and personalization that big platforms cannot. So we get into now the rise of the super business app. So Meta recently announced that U.S. customers can now make payments directly through its WhatsApp business app, moving the market closer to the super app model that combines messaging, shopping, and payments in a single experience. In other regions, platforms like WeChat and Grab have already blurred these lines, serving not only as a payment and shopping tool, but also as small business hubs with supplier management, payroll, and marketing features. Other examples, like Apple's Business Essentials, integrate device management with credit and savings, while Google is piloting embedded lending and cash flow management for small and medium-sized businesses. E-commerce platforms like Shopify and Amazon already provide in-app credit, inventory tools, and customer acquisition services too. The message here is clear. Small to medium-sized businesses want a one-stop shop where they can manage everything. Zooming into finance specifically, embedded finance is no longer just a consumer-facing play. It is reshaping how entrepreneurs handle banking. For banks, however, the rise of super apps presents real risks. So the embedded finance shift. So by 2030, embedded finance is projected to reach 7.2 trillion globally. At the same time, 48.4 trillion in assets will pass from baby boomers to younger generations, with more than 70% of boomer-owned small to medium-sized businesses expected to change hands over the next 20 years. This massive wealth transfer, paired with a generational shift in business ownership, highlights how central embedded finance is becoming. Gen Z and millennial entrepreneurs are digital natives with very different expectations than their boomer or Gen X predecessors. According to Visa, 41% of next-gen small to medium-sized business decision makers already use 6 to 9 banking innovations, and they rely heavily on platforms like TikTok, Instagram, and YouTube for financial guidance. Meanwhile, Financial Brand reports that 79% of Gen Z and 69% of millennials already use large banks as their primary institution. Their reasons are straightforward. Let's take a look at these. So digital sophistication with Amazon or Instagram level personalization expected across devices. Mobile first access with nearly half rarely or never visiting a branch. Payment flexibility, given that 72% are frequent users of P2P tools like Venmo and Zelle. Cybersecurity, with over 80% wanting more robust fraud protection. And then it has a nice little chart here. And this is from a company called Aperture. So it basically asks, what type of bank or credit union do you consider your primary institution? So for Gen Z, that would be 79% consider a large bank their primary institution, only 2% with community banks, 11% with credit unions, and 8% with an online institution. Could be like a neobank, a Chime, something like that. With millennials, they have 69% are with large banks, 6% are with community banks, 15% are with credit unions, and only 10% are with online only institutions right now. So, what I find concerning with that is obviously community banks are at the smallest end of that spectrum. Now, why is that? Well, community banks don't really have the money to put into, having, extremely fancy websites and extremely fancy mobile apps. And their only real option for a P2P platform tool is Zelle. And Zelle is owned by the big banks through early warning systems. And the big banks, they don't make it cheap to get onto that platform. Zelle is a very expensive platform. Also, while this stuff is great, I would tell you that, banks have issues with this stuff in terms of, Venmo and Zelle are great, but there's also a ridiculous amount of fraud on there. And I don't think banks have really gotten their hands around how do you deal with that fraud. Mobile first access is a very interesting one because, again, it says, rarely half, ever really visit a branch. I mean, yeah, they might come into the branch to open the accounts and basically get things set up. But once that's done, they're out, and you barely see them after that, unless they want to come back for a loan, like they need to buy a house, they need to buy a car, they need student loans, they want to start a business, whatever the case may be. In that case, then they come back, and then you get to see them a little bit more. Digital sophistication, again, like Amazon or Instagram levels, unfortunately, a lot of your community banks out there don't have that kind of money. They don't have the $13 billion tech budget that JP Morgan has, or that, Wells Fargo or Bank of America, who are spending, $8, $9, $10 billion a year on tech. They don't have that. So again, we're going to get down here. So now we're going to get down to, I'm going to finish this up, and then there are going to be 5 strategies for what can banks do here. So given that nearly half of small to medium-sized businesses fail within 5 years and 2/3 within 10, yeah, it's a big issue, the appeal of a one-stop business banking platform becomes clear. Solutions like Square and Shopify already bundle payments, credit, and analytics into seamless experiences. Banks that cannot match this convenience risk losing relevance unless they can bring something even more value. This reality may feel daunting, but it also clarifies where banks can stand apart. So how can banks compete in a potential world of super apps? Well, despite the risks, banks hold a key advantage: trust and relationships. Surveys show that while younger, small to medium-sized businesses adopt fintech tools quickly, they still value personal advisory support, especially when it comes to analytics and decision-making. Nearly half also report low confidence in interpreting financial data, a gap that banks are uniquely positioned to fill. Trust remains an edge, but only if paired with seamless digital experiences that can meet entrepreneurs where they are. To turn these strengths into staying power, banks will need to be intentional about how they compete in a super app world. So here are 5 strategies for banks to seize an advantage over super apps. Number 1, monitor embedded business finance partnerships. Number 2, differentiate with relationship-based advisory. Number 3, explore more embedded partnerships. Number 4, create seamless business banking ecosystems. And number 5, target next-gen entrepreneurs with social proof. So we're not going to go through every single one of these. There's a couple of them I want to key in on. But differentiate with relationship-based advisory. So younger, small to medium-sized business owners need guidance, but aren't finding it on apps. Exactly. Banks can win loyalty by offering consulting on analytics, financial wellness, and cash flow planning, bridging the gap between data and decision-making. So this is a very key point here with this. I have often said that, a lot of times with the apps are great, but hey, good. If you have a problem, good luck trying to get a hold of somebody. Usually there's never a phone number, and maybe they provide some kind of email, which they usually change about 15 times over a 3-year period of time. So then it's like, oh, that email doesn't work anymore. You need to now email this or whatever. And you send these emails, and it's like going to a black hole where it's like, whoa, it's like, what is the deal? What is the deal with that? So that's an issue there. And banks usually do, especially community banks, do really good with that. Once somebody comes in and basically says, hey, can you help me with this? That's where community banks really shine. That's where, community banks make it very easy most of the time for, a customer to get hold of them, to deal with them. And then when they come in, provide a lot of really good advice and guidance. And that's what ultimately wins the customer over. But at the same time, there's a difference between a 25-year-old and a 40-year-old. You're that 25-year-old, like I said, you're only going to see them one time when they come in the branch, and you might be waiting 10, 12, 15 years before that person comes walking back in the door, because now their life has become more complicated and they need more help and more guidance. So that's very interesting there. Create seamless business banking ecosystem. So half of all small to medium-sized businesses fail within 5 years, due in part to the highly fragmented nature of their systems. No, I don't think that's it. I think there's a lot more. There's bigger reasons for that. Cash flow, lack of capital. There's not being sophisticated enough, or not understanding how to actually run a business. There's a lot of other reasons for that. But banks can stand out by providing unified platforms that combine payments, lending, and cash flow management. Yeah, I agree that is true. And banks, I think, really need to work on that. What is that package, if you will, that you're going to offer that small business client? So that kind of wraps it up. Working with some embedded partners, your fintech partners, to create this better mobile app or a better ecosystem. Again, all great stuff, and CFIs can do that. But again, like I said here, I mean, CFIs, they do have challenges, because they're challenged with fraud. They're challenged with the amount of money that they have in their budget to do some of these things. They're challenged with having Zelle be the only real option for them, and it's an expensive option. Just trying to stay in front of those Gen Z and those younger millennials. That is definitely a challenge. And so we'll have to see what happens here with this super app. And I will say this, I'll leave you with this last thing. China, with WeChat in China, they have done a very good job. I want to say that a lot of other apps that have tried this have not, as of yet, been able to succeed or been able to replicate what it is that WeChat does exactly. I think there are a number of reasons for that. Obviously, this stuff is very complicated. It's not as easy as just wishing it into being. Oh, we'll add this and we'll add that and we'll put it all together in this nice little package on the app. It doesn't quite work like that all the time. It's not quite that easy. So, but anyway, with that being said, we'll keep an eye on the rise of the super app and see what that does in terms of the market, and what that maybe forces some banks out there to do in terms of what they're doing with their own mobile apps. And we'll see, but we'll keep an eye on it. I'll let you know if there's any updates with this. But with that being said, I'll wrap up this episode by saying, if you like this episode, please make sure to like, share, and subscribe. That always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I hope everyone has a great day out there. Thanks for listening, and I'll see you again real soon.